Hi, everybody. Thank you for joining the webinar here, this Fireside Chat today. My name is Jason Cozens, and I'm the founder and the CEO of Glint, as many of you will know. That's the platform that gives you a reliable and secure form of money by enabling gold as everyday money with the Glint app and MasterCard. But today, that's enough about me. Today, I'm very privileged to be speaking to Joe Endoso. Joe is the Chief Operating Officer at Link2, which is the technology-enabled investment platform. Link2 provides accredited investors with access to shares in private companies backed by some of the biggest VC funds in Silicon Valley. But Joe, welcome, by the way. Thank you for coming on our Fireside Chat here at Glint. We had a good time to meet up and chat in Las Vegas at a conference we were both at, actually. And I was just blown away by how many Link2 fans there were at that conference. And it was amazing to see the love that I generally saw for your business, the dedication for to your platform. They really were connected with it. But before we talk about that, can we just talk about a little bit about what's happened with the markets, private or public or mixture of both, whatever you think, over the last few years, because it's been quite an uncertain time, hasn't it?
It sure has. Probably the most challenging time in markets since the great financial crisis, actually, and you've seen that through 2022, where we had a significant retrenchment in certainly all the publicly traded markets, starting with equities, and you saw values decline significantly. Private markets historically have lagged public markets by roughly 6 months. So that downward adjustment in private markets didn't take place until about midway last year, and it will continue. And so today, even though we are technically at least in bull market territory again in equities, that is not quite the case with private markets yet because of that lag. Private market valuations continue to get marked down, although at a decelerating pace. And all this actually, from the standpoint of our business and our business model, which is about investing, is actually good, believe it or not. It's paradoxical, right? But when you step and think about it, Jason, it makes sense because it's in down market cycles. If you're an investor and you're going to be long on stock, that you actually make money, because it's in those markets where one has the opportunity to acquire stock at very attractive valuations relative to the upcycle in markets, right? So that's certainly the case. We towards the end of 2021, as we saw the froth building up to unprecedented levels in the public markets, begin to creep also into private markets and see valuations get driven to stratospheric levels. We pulled back in Q4 of 2021 and built up cash. So we slowed our investment pace, we built up cash, and then we started investing aggressively in, call it, the second quarter of last year to take advantage of declining valuations. And we have since then been investing, quite aggressively. The other thing that we did to adjust for the overvaluation that we were seeing in private markets during that frothy period of 2021 was we started moving to earlier stage companies where we saw that valuations were more reasonable relative to intrinsic value. And that is something that we have continued to maintain. So in the past, we were investing only in unicorns, and these are private VC-backed tech companies with valuations of $1 billion and above. When the market went into overdrive mode and we saw valuations reach what we felt were irrational levels, we backed away and we started going to mid-stage companies, so companies below $1 billion in value, and we set a minimum of 500 million. Today, we are actually on an opportunistic basis looking at companies that are even below that mark if we feel there's significant potential. One of the companies, by the way, that we're super excited about that is in that exception category are Glint. It is precisely for that reason that we made the investment in Glint, because we think that the value potential of your company, Jason, is significant. And we thought that this is actually a really opportune time to go there. And, I chair our investment committee and basically convinced my peers that we were going to go and do Glint well below the $500 million mark because of that long-term opportunity.
Yeah. Thank you. Let's just talk about the word investment for a second. I mean, I think sometimes people forget what it really means. I mean, here at Glint, we've banned the word investment in relation to gold, for instance.
Sure.
We just see gold as a store of value. It is just a medium, a ledger between people and what we owe each other. And of course, the average return that you see on gold and other assets from around when I was born in 1970 to today is about 7.78% annually. And of course, we're in a world where, the broad markets have only returned about 10% per year. Really, you've got to do a lot of work in order to get a real return. I mean, as I say, for me, when people see asset price inflation, that 7.78% for me of gold return isn't really a return. It's simply asset price inflation. And so, when the markets, return at about 10% per year, you've got to do something special, haven't you? You've got to do quite a lot of work in order to actually make progress on that. Is that where venture capital has done well? And the difficulties around getting access to some of these deals is legendary, isn't it?
Yes, and you just spoke to a really fundamental difference between gold, which is the most precious commodity, and it's precisely for that reason that historically it's been looked upon as being not just a store of value whose role as such has persisted more than any other known store of value in economic history, but also as a mode as a currency, as a mode of value exchange, which is what I think is revolutionary, by the way, about Glint, because you've now tapped into that other aspect of it. But those aspects have largely emanate from the fact that the supply of this precious metal is relatively finite and fixed, right? So when you talk about investing in the equity of private VC-funded technology companies, that's a totally different animal, because there, the value of that company and therefore its equity is something that, with appropriate management and in the right market conditions, right, will actually appreciate considerably over time. So it's not a matter of the equity being fixed in amount as much as the fact that the equity intrinsically grows in value because the company grows in value. It grows in value because its market increases, the number of customers it has increases, and what those customers are willing to pay for its products and services, that magnifies its revenue and therefore its earnings over time. And that in turn gets reflected in the equity value of a company. So it's a very different thing than a commodity whose amount is fixed and it's purely supply and demand. Here we're talking about the intrinsic value of this company growing over time as a result of the efforts of the individuals that are running the company and its impact in the market and the product and service, obviously, that it creates, right? So that creative aspect is what we're tapping into, and there is no other segment in the economy of the time we live in that is creating more economic value than technology. So technology-enabled businesses like yours and ours, Jason, are at the forefront of that value creation. One only has to look, for example, at the major public market stock indices and do a sector analysis, and you will find, whether you're looking at the S&P 500 here in the States or the FTSE 100, how big a proportion of that total index is made up for by the value of technology companies. And certainly here in the US, it is by far the largest component of our equity indices in the public markets. Private investing is driven by that notion, right? That if the biggest source of value creation in equities is going to be driven by these technology companies, then can one get an edge over the public markets by investing early? By investing, so if you think about the life of a company as a value creation curve that hopefully rises to the right over time, right? Then it's a simple proposition to say that if I can get on that curve earlier rather than later, I will increase the amount of value appreciation that I experience through my investment.
Yeah.
So that is fundamentally what Link2 is about.
Yeah, because I mean, the thing is, I've read, a lot of us have read the stories about how difficult it can be to get access to some of these private company stocks. I've read books or webinars, podcasts about people literally waiting in people's lobbies and telling them, I'm not going to leave until you give me some allocation in your business. And of course, there has been this kind of closed family, hasn't there, within Silicon Valley, where people in the know, friends of friends, got access to equity in high growth or potentially high growth businesses. And really, it's been a traditionally very closed off world, I think, hasn't it?
Yes, it's almost like, saying here in the States, right? You got to know a guy who knows a guy who knows a guy.
Yeah.
A lot of the access is based on, social and professional networks. I mean, one of the largest investor in our company in Link2, Jason, is a billionaire angel investor in Silicon Valley named Greg Kidd. Greg had the good fortune of knowing a fellow named Jack Dorsey when they were both really young guys. And they set off to start up a little payments company that had success for maybe a year or two before it got obsoleted by another payments technology. But the point of that interaction between Greg and Jack was they got to know each other. So when Jack got off from that payment company to start something called Twitter, whose technology was an offshoot of the messaging function that they had created for the payment rail that they were building in the prior company, who was the first guy that Jack went to ask for seed capital? It was his buddy and, co-founder, Greg. Greg was the earliest outside investor in Twitter. So guess how much money that made. And then Jack Dorsey goes off and starts another company called Square. So Greg gets to be an early investor in that. Greg is an early investor in Twitter, in Square, in Coinbase, in Ripple. I mean, his portfolio reads like a who's who of Silicon Valley, but he's the guy that was there, right? So it's very difficult for normal, regular people like us to have that type of access. And that is the single biggest impediment to, private individual allocation to this asset class. It's been historically dominated entirely by institutions. by venture capital funds, private equity funds, hedge funds, sovereign wealth funds, all the big boys, the big money. We started Blink 2 with the premise that we wanted to open up this class of assets beyond that institutional, elite. We wanted to democratize the space and make it open to everyday people. Now, it's not quite everybody, right? Because in most developed economies, like the US and like the UK and Europe, there are requirements by the local securities regulator that one has to have a certain level of financial sophistication and, a certain level of wherewithal financially before they can invest in this. But if you meet those requirements, you can invest in these assets. The problem is, how do you do it? How do you do it in a manner that is economical and where you actually have access to top quality deals, right? That was the problem. And I struggled with that too. And that was part of my experience as an individual that led me and our founder to start the Link 2 that is around today. So it's about providing regular individuals who are accredited investors systematic access to the best opportunities for investing in VC-funded technology companies. That's what it's about. And if I may just share a screen real quick, I will show you a chart that is based on data from Cambridge Associates. Cambridge Associates are one of the top consulting firms that support asset management houses around the world. And I'd like to share just a little graphic.
Yeah, go ahead. Go ahead.
How venture capital returns have done historically.
Yeah.
Do you see this?
Yeah, we can see that. Yeah.
Okay. So here is on the top side how venture capital returns have looked across the 3, the 5, the 10, and the 25-year investment horizons. The highest column in each of these time horizons is venture capital. And you can see how the level of absolute performance and also how it's outperformed private equity, which is typically leveraged buyouts, as well as the S&P 500. These are the kinds of returns that we want to make available to regular individuals, right?
Well, I mean, arguably, it's a necessity if you want to grow your wealth, isn't it? I mean, because arguably the asset inflation that's happening every day, even if it's not happening in kind of CPI inflation, within the financial system, that asset inflation means that really you're not moving forward unless you're well above the kind of 7 or 8, 9% mark. So yeah, it looks a very important part of someone's portfolio.
Absolutely. And the bottom part of the chart just shows how venture capital investment compares to the returns over 5 years across other types of alternative private investing, right? There are other types of private investing one can do that are outside the public equities market. But again, venture capital of all the different types outperforms. And so that's what we're trying to do, is provide access to that particular class of assets to regular everyday investors. And on the Link 2 platform, one could invest at a minimum of $5,000 US. So that's the minimum investment. Yeah. It's a relatively low entry price compared to the institutional world, where if you wanted to get into a venture capital fund, depending on whether you're talking about one of the biggest top tier funds where the average limited partner ticket is 10 million, or the smaller funds where you might be able to get in at, say, a $250,000 limited partner in a fund. Here it's $5,000. And by the way, it's not a fund, meaning you're not turning over your money to a manager and giving them effectively the discretion, right, to make an investment on your behalf. So you're blind going in. You don't know what you're going to be invested in. You're going to be locked up for 10 years in that fund, and then you're going to get charged an annual management fee, and then you've got to pay a 20% carry, meaning whatever capital gains you make at the end, you've got to give 20% to the fund manager. In our case, you're making a selection of a stock in a company that you like. You make that decision. And once you make that selection, it's yours. You're not locked up for 10 years because the investments on our platform are liquid. If for whatever reason you change your mind and you decide you need the liquidity or you want to reinvest the funds into something else, you can do so on our platform.
Yeah, I mean, I love the way you're democratizing access, because I think that the inequality really isn't just the fact that these big venture capital investors have been able to dominate this market. It's also the hose pipe of money that's been pumped into them. It's allowed them also to deploy this huge amounts of capital, which they've got for free, just about. They've been given money by the banks. You know, and then on to top that off, they're the ones who get access to this small group of opportunities. So no wonder that, you know, a few people own more than the poorest 50% of the United States. And it's a crazy situation. But when you start to see all the benefits they have in their favor, the free money supply, the access to these deals, you start to understand why. And of course, we're trying to deal with the sound money side of that, and you're trying to deal with the accessibility and the democratization of that. So that's incredible, really, what you've done. And obviously, I'm always impressed with. I know how hard it is for anybody to build a new business, and I'm always got to take my hat off to anybody who's involved in, you know, the productivity and the innovation, creativity that comes with that. So thank you for delivering this for the world. But you know, there are a lot of platforms out there that people talk about and look at, or that's, you know, with Glint, actually, we come across it can be very confusing. Lots of different ways to buy gold, for instance, lots of different ways to get access to investments. How, and you've mentioned some of these things, but just to kind of summarize it for the audience, how would you differentiate yourself? What, simply, how do you differentiate yourself from different investment platforms? If there was like a list of things, what would you say it was? How do you, what's your unique position within the market?
I think the thing that is most distinguishing about us is that, unlike everybody else in the private space, we're not a broker. We are an investment principal. And what that means is that we actually use our balance sheet to take on the risk of those investments ourselves. And it's precisely for that reason that we're able to make the investment experience for our members instantaneous, right? The nature of investing in restricted private company stock is such that it entails a process that is relatively lengthy, meaning spanning several months before one can close such a transaction. And if you're doing a transaction in the secondary market, meaning rather than buying shares being issued, new shares being issued by a company, you're acquiring stock from existing shareholders, that transaction also is subject to the consent of the issuer and the ability of the right of the issuer to basically null your transaction by matching your price and buying the stock in your place. So you end up with a transaction that is in escrow for, say, 4 months, and then at the end you realize you actually don't have a deal because the company has exercised its right of first refusal, right? Nobody in their right mind would invest $5,000 having to go through that arduous process with all the legal and the accounting complexities of it, and then also end up at the end of the 4 months with no trade to consummate, right? That's just nuts. So the way we insulate our members from that experience and those risks is we use our own capital. So let's, to give an example, if we make $1 million investment in, pick a name, in Glint, right? that investment is made by one party and one party only, and that's Glint 2. And Glint, on its side, don't have to worry about thousands of investors having to write their individual checks. They get one check from one counterparty, and it's linked to, and they're accountable only to that one shareholder, right? After we close that investment, we take a portion of that investment and we put them into various investment vehicles that we manage. And it's those investment vehicles that our investment members, investment community members come into. And that then allows them to do a couple of things. One, it allows them to make a very small fractional investment in that 1 million that initial investment we had made. It allows them to make the investment instantaneously. And it allows them to make that investment over a very sophisticated mobile app or an investing platform, an online investing platform on their laptop that they can access through their laptop or their mobile phone.
Yeah, amazing. By the way, someone's asked at the beginning if we could turn closed captions on. I am very sorry, I don't know how to do that. But next time I'll make sure that we do have closed captions on. So apologies for that. But just talking about that, how do you, well, first of all, who can access your platform? From which countries? Because obviously you're based in the US. Is it just US investors that can access Link 2?
We have today investors from 95 countries around the world. Our largest investor base is obviously in the United States, but outside of North America, the second largest component of our customer base is actually the UK and Western Europe.
Fantastic. Okay, and I've tell us a little bit more about the real-time liquidity that you offer on the platform, because I'm sure some people might be interested in that, and how you do that.
Yeah, we do that the same way that on the one side of the order book, on the investing side of the order book, we use our balance sheet. So too on the other side of the order book, where people are seeking liquidity because they want to sell their investment, right? We use our balance sheet to buy back their investment from them and then hold them until such time as there's somebody else that wants to buy that particular investment for their portfolio. So we act as an intermediary using our balance sheet on both sides.
Right.
And that allows for liquidity to happen instantaneously.
Okay. And you've got a lot of different companies on the platform. It's quite a diverse portfolio. How do you stay, or how do you ensure that portfolio remains diverse, and why is that important for investors that it remains diverse?
Because unlike a commodity like gold, right, where you know what gold is and you know the relative fixity of supply, in the case of investing in companies, nobody has a crystal ball and can accurately predict, much less guarantee, the performance of a company over time, right? So in order to hedge, we encourage our customers to build diversified portfolios. In order to give them that ability, we have to give them not one, but a fairly large selection of high quality private tech companies that we've curated and that we've invested in ourselves. So we have an active research team and an investments team that make the initial investment. And the goal there is to provide a wide variety. So we have invested in total to date in roughly 67 or so companies. Interestingly, 6 of those companies actually went public during the 2021 IPO window. And the returns on those 6 spanned from the top return was a return multiple of roughly 9.5x in a period of about 15 months. So people were able to get 9.5 times their money back. And then the lowest return was roughly 1.2x in a period of about 11 months.
And can you give us a bit of color about the kind of companies that you've managed to get equity onto the platform for?
So one of the limitations there is we only invest in companies we can more or less understand, right? And I'm hardly the smartest guy on the street, so I have to, there are sectors that I believe are fundamentally interesting, but where we just don't have the requisite level of comfort to go into. So the areas that we have gone into where we're comfortable with span fintech. I mean, in my prior life was an investment banker, and I've worked professionally in the financial services area all of my professional life. And so I know that relatively well. So we do a fair amount of fintech. Glint is a good example of that. We do a fair amount in the digital asset or crypto space because I had experience in that sector through a prior startup. And then outside of those two, we have a fair amount of investment in enterprise software. We like the drone and the autonomous vehicle space. So we've invested there. We've made some investments in alternative and plant-based foods. We just closed last week our very first investment in a space technology company, and we'll be making additional investments in space technology. And we have been making investments as well in various areas of artificial intelligence and AI. And most recently, we closed 2 investments in the generative AI space, which is the subsector within AI that has drawn the greatest amount of investment interest in recent days, and also a lot of public interest.
And am I right in saying that when you bring these opportunities to your platform, they're not always available, are they? I mean, stock becomes available, then it goes, and then you've got, kind of got to get in there and get the stock whilst you can, I think. Is that right? That's kind of my perception.
Yes, very unlike the public market where, once you do your stock selection, you simply go on to your brokerage account and just execute on a trade. In private markets, the trading, the stock is restricted and it's subject to all the different things we talked about before. So it's available only in finite quantities. And once we make an investment and it gets fully subscribed by our members, we are basically out of that, right? The only available supply are any sales by the members that originally bought it that want liquidity, or our ability to go back into that external market and acquire more shares, which may or may not happen and may happen at a different price. And so there are all of those constraints that make supply less than, continually available.
And here at Glint, we've been talking to the community really about various bridges that we can build to other ecosystems. And using our APIs, of course, we can link into other things. We've discussed some ideas about how, the concept in the future about being able to use gold as ability to buy equity on the Link2 platform directly, completely outside of the traditional incumbent payments and banking system. But, where do you see Link2's aspirations and plans for the future, for future growth?
I'd like for us to, over time, expand to become an all-encompassing alternative products platform where one can go to make investments and allocate across various types of private market assets, right? So today we've got venture capital. I had shown you a graph a table that shown other types of private market assets. While none of those have performed historically as well as venture capital, there are technical financial reasons for wanting to allocate across that broad spectrum. And they have much to do with the fact that when you want to achieve full diversification, you have to look at how different asset classes correlate to public markets and the degree of volatility that's associated with each of those asset classes as well, right? So you want to diversify according to correlation and according to volatility. And that by allowing you a span of different private market assets, one can achieve a broader diversification than just investing in venture capital alone, theoretically at least, right? So that's the whole vision long term. But we started with the richest, best returning asset class within private markets.
Great. Now, yeah, there's a couple of questions. Somebody's asked me if they could be able to replay the Zoom. Yeah, we'll make this conversation available on our YouTube channel. You'll be able to come back and listen to it at your own leisure and in your own time. And we'll make sure that any links are available underneath in the description. We've had another question about Glint. I'm not going to kind of use this webinar to talk about it too much. There's a question about whether the COMEX gets blown up by force majeure or the SEC shutting it down, what would happen? All I can say is that Glint is backed by one of the biggest producers of gold in the world, Sibanye-Stillwater, listed on the New York Stock Exchange. We've got access to billions of dollars worth of gold should anything happen with supply. And also gold is a global market, as we've seen recently. You know, as the questions around the dollar's demise start to rise, and the dominance and the role of gold is in ascendance, with central banks buying more gold than they've ever bought. Of course, gold's a global marketplace, so you know the price isn't just set by the COMEX. There's prices being set for gold all over the world. There's always going to be a market for it. So I don't actually think that finding a price is going to be a difficult thing to do, even in the worst case scenario. But finally, Joe, I mean, first of all, thank you for coming. I know you're exceptionally busy talking to lots of other founders apart from me. And I do say thank you for the work you've done with Glint. It's been a pleasure working with you. But how can our listeners today, or the listeners if you're streaming this on YouTube later, how can they get started with Link2 so they can start leveraging its unique offering, so they can enhance their investment journeys and begin their and make sure that they are definitely swimming against the tide with the power of Link2 behind them, and I'd say the reliability of Glint, of course. But how do they get started with Link2?
It starts as easily as downloading our app. It's available in both the Apple as well as the Android stores. So use your mobile, download the Link2 app, LINQTO, and get started. Or if you want to access us through your laptop, www.link2.com, and reach out to us. We've got a very big customer success team as well to provide you with support as you onboard if you're not able to go through the process yourself. It's highly automated, but if you run into issues or have questions, feel free to reach out to our customer success people. I'll also say as a final note here that we are partnered with Glint. We are not just an investor with Glint, because part of the forward vision is to integrate with various types of value holding mechanisms, of which Glint is one, right? And allow people to use gold as a currency and take some of that currency and spend it on investments on the Link2 platform. We're currently doing so with another partner that is a UK-US company called Uphold. We have integrated their crypto wallet into our platform, so customers that own crypto can use that wallet to make investments on Link2. And I believe one day we'll allow the same thing to happen with people that have gold on Glint.
Yeah, together we're building a gold-based financial services ecosystem. Joe Endoso, thank you from Link2. Go and visit their site. I tell you, when I met their clients in the show, nothing to do with Joe, nothing to do with Link2. I just kept bumping into these people who kept telling me about Link2. They definitely loved the product, and that customer success team must be outstanding because they all loved it. So I definitely recommend you go and register now. You've got nothing to lose. Go and see what's on their platform. Thank you, Joe. Thank you, everybody, for visiting. And until next time, take care.
Thanks. Thanks, everybody. Thank you, Jason. Bye-bye.